Hey bro, I didn't actually start talking, that's why I kept my microphone. I was just looking at the chart, looking what happened. Today, although I'm not gonna talk about the chart anymore, too much, but thanks for letting me know. So I was just having a look. I was just chatting and looking like what price did in the last couple of days, cause I was not trading last week. But if you are here on my first or second stream, you will know like I showed the drawn liquidity and how important it is for the daily candle open, close, high, low. Those things are. If you haven't, let me give you a short example because it's really important to know. So what I talked about is, let me hide everything. Okay, let that be there. Okay, so usually what price tends to do is, wherever, let's say like this is the day I'm on the market, and what I'm seeing here is price on the daily chart is coming from a CB, or sell side imbalance, buy side inefficiency, or a fair value gap, and then it grabbed some liquidities on its way up during this moment. But for this specific area, what I look into is where the prices are closing based on its previous move or previous days. So what I can see here is like price took the liquidity, failed to close above the high, so I'm expecting the sell side. Price took the sell side, like came lower than the low of previous day and then closed below that. So now I'm expecting another sell side here, and price again came lower, took the liquidity, closed below, now expecting this on. So price came, closed below, expecting this on, like this. Okay, so still here also price closed below. But what I also talked about yesterday is you need to look on the left as well. So what I'm saying here is based on the calculation, things like that, since I have talked about it on my first and second stream for literally a long time. I'm expecting please check your mic. Okay, okay, thanks for letting me know that you can hear me. It's, yeah, I actually kept it muted over there, that's why. I was just looking on the chart like what happened on what chart, because on the NQ I'll go shortly. Just let me finish this part here. So based on this sort of thing, okay, let me give you an example where price is failing. So around this area I was expecting a move upwards. Okay, since it's a daily, like sometimes when price takes the liquidity, but this is the liquidity on the left, it has some relative equals, but that's not the thing. Like whenever I see price is failing to close below or above a previous day, or if you do it on 4 hours or hourly, it will somewhat give you a very high what it calls accuracy as well. Like it's not 100%, you cannot, like nothing is 100%. Okay, even sometimes when everything, like every calculation is going right, you will find a losing trade as well. So nothing is 100%, but what I'm saying here is whenever price takes a liquidity from a high or a low but fails to close above that line or below that line, depending on what side it's taking, I try to what it calls, I try to look for the opposite side liquidity on the higher time frame, okay, and then on lower time frame there are some other rules. I already talked about it. So you saw some sell side on, like taking the sell side liquidity closing below, so the next day mostly I'm looking a run towards this low, and depending on where it closes and how far it can go, I can look on my left side or previous swing points or point of interest. That can give me some idea about how far it can go. Okay, so this is how I showed them on the first day and the other day, and based on that, these 2 days I was expecting a bullish run. The reason is price, if I go to actually ES, it will be clear here. So price took some major liquidities from relative equal lows, also this sort of swing lows over there, and it actually reacted from the consequent encouragement of this daily fair value gap, and also on the weekly I think there is some volume imbalance with fair value gap as well. Yeah, so there is this fair value gap and small little volume imbalance also, although price is not here yet, but on the daily it's making more sense. And that's why, like, ICT told that most of your analysis should be on daily and the hourly. So on the daily it's very clear, like if you look for the mean threshold or the midpoint for this one consequent encouragement, you will know that price respected that midpoint. You see that midpoint. So since it took some liquidity, exactly what happened during this time, okay, it took the liquidity, there are some order blocks in this case, so a smaller move up. But since price was falling for a long time, I was expecting that even though it will even if it takes the what it calls the buy side liquidity of the previous day, I'm expecting that it wouldn't close above that line, so that I can shift my bias to the downside and keep going until it reaches to a what it calls reaches to a point of interest of previous move. So that's what happened here. And during this move, one of my friend also streams, so during his stream I actually talked about these specific days, like I'm expecting, just because it took some major liquidities and also there are some higher time frame point of interest that it's respecting. On this day close I had that in mind, so on my friend's stream I actually talked about these 2 days. But based on the candle close, what I just showed you, as you can see, like these 2 days I was expecting, but let's start from the Monday's close. It closed above, so next this closed above this, closed above this, and now I'm expecting this one on the ES, but ES is showing some, like on the weekly it's huge, but like on the weekly the entire move looks like this, but on the daily ES still doesn't get that what it calls the momentum to take this liquidity. But if you go to the NQ, you will see it already took the liquidity, and I was actually like every day it's closing above, it's taking the next day's liquidity. That's what I was saying. Anyway, so it already took this sort of liquidity. There are some opening gap or volume imbalance on the daily candle. I think mostly you can call it volume imbalance since the gap is like gap, okay, but this is also a form of volume imbalance. Anyway, what I'm expecting, since NQ I don't trade and I really didn't do much analysis on NQ, that's why I was looking during like at the very beginning of my stream, like I was looking into the chart. But today's stream I actually wanted to talk about something else. It's like I have some suggestions, I have some things to share with you guys, so I hope, like, I found those things really valuable even for me, so I thought like it's a very good idea to talk about those things today. So, and also like I talked with my XRP chart analysis, please. Okay, I'm not gonna do that crypto analysis because already I'm receiving messages after messages regarding XRP. Okay, because someone actually woke me up early in the morning just to know where it gonna go. Ripple, the previous day I helped a brother to earn some money, and now he's calling me every day. This is bullshit. Okay, he's calling me now and then just to know like where Ripple can go. Now there is a thing, ICT believes that Bitcoin gonna go zero. Okay, he talked about it a long ago, and after that I don't know like if recently he has talked about this or not. But even though it's coming out from ICT, let me tell you, it will never go zero. Okay, it's just give it the time that forex or other market got. Bitcoin has completely different way to move. Okay, and the way the world is fast forwarding, digital currency will be a thing. They may change the name, they may do whatever it requires to do in terms of some regulations or regulatory boards, whatever they want to do they can do it, but Bitcoin will never go zero, as simple as that. Okay, why he said that I know already, like the way he analyzed it was on weekly chart, and there are a lot of things like it took the liquidity, gave a market structure shift, and eventually there are some unfinished business at the bottom. So they are expecting it's coming lower until it hits zero. Okay, but the problem with cryptocurrency is it gets influenced, it get influenced within very short move or short thing. Why is that? Let's talk about crypto then. I was not actually here to talk about any market or price action or anything, because I have something very valuable to share with you guys, that's why. But since you guys wants to know about this, what was it, coin market cap. Okay, so let me show you guys something. You see this, the global crypto market cap is only $1.33 trillion. Now let me show you another thing. Anyway, they can fix it by autocorrect. Market cap, you see this 2409 trillion. Trust me when I'm saying this. Just 3 or 4 months ago I saw it 2400. Okay, like 2400 trillion. So people who trades forex, and how long it is there for, think about that. Okay, it's 2409 trillion dollars market cap, comparing to forex what Bitcoin has, only 1.33. now previously it had 2.48 or 42, something like that, I forgot actually regarding the market cap. But increase over the last day, 1.51% increase. Okay, the market cap has increased in 1.51%. now 1.33 trillion dollars in a market, it increased 1.51%. but my understanding, my question is, share your very important. Okay, yeah, I'll share that in 1 minute because I just started. So let me build up, let me get some more people so that they can also get the value. But what I'm saying here is, like, with this small market cap, it's very easy to manipulate the market. Even the forex, when the FX calendar, what happened, FOMC member speaks. Okay, so indices, let me see what is the indices. the hell I'm looking at? Okay, just the S&P 500 has 35.94 trillion market cap. Okay, 35.94 trillion, the chart that I was showing here. Yes, okay, this yes. Now I don't know when I wrote it, but anyway, it looks good. So the ES has what was it, 35, nearly 36 trillion dollars market cap. Okay, now last year it was 30.12 trillion. I don't care, just look at the market cap. Now about the ES, let me get back to 1 minute maybe. Okay, you see these moves. Now let me go to 15 minutes and let me show you actually what was ES doing the whole day. Just look, like if you just one red, one green, one red, one green, it's like that the whole day. Okay, and now what I'm trying to say here is, you see the time 9:30, this candle 9:30, and then 10, and then all this after that. Like look at the wicks. Okay, people who trades in 1 minute, 5 minutes, something like that, these were the single candles. Okay, a single candle moved that far because someone from the FOMC, Oller, he was just giving a speech. Now if a 35 or 36,000 36 trillion dollars market cap, what it calls market cap share or indices, that can move in a minute like that just because a person from FOMC is speaking, and that's even not a red folder event. Tomorrow Wednesday 9:15 am, Fed Chair Powell speaking. Come back tomorrow at this time, see what happens during this time, before and after. And that's for a 36 trillion dollars market cap, and crypto has only 1.33. But why I'm saying this is because few things doesn't work exactly the way it works on other places. For example, Bitcoin has a halving in every 4 years. Okay, so every 4 years what happens is they reduce their market supply of Bitcoin, and also they reduce the mining rate as well, how many people can produce by mining. Okay, on the other hand, Ethereum became a deflationary. Okay, Ethereum, what was that, I forgot the website, but anyway, you can see like every day how many Ethereum is getting burned. So whatever the total market cap is, it gonna go lower and lower. Okay, like total volume in the market or the supply in the market. So even though there are some patterns that showing eventually it gonna go lower, it's not. And if you don't know, like the ERC20 or all those networks chains, the blockchains that they have used, like all the online payments, it uses this sort of methods. Okay, like Ripple has now, I think, Visa or MasterCard, someone is trying to come with Ripple in a contract or something. Anyway, so this was not my topic. However, since you asked, let's see what's happening over here. I really don't like this sort of things, because on this day, if I'm not wrong, it was the day Ripple won their case. Okay, and I had something marked from the weekly, if I'm not wrong. Yes, so that's the fair value gap that I marked on the weekly, the mean threshold, consequent encouragement. It came actually way lower than expected with this week. So now if I were you, I would look where it closes. Okay, if it can go above this 50% or not on the weekly. Yes, so on the weekly that's the level I'm thinking, okay, which is 84.24. If it can go and close above that, then it has a higher probability to go, but that's not gonna happen. Let me tell you again, okay, the Bitcoin or the crypto market bull run gonna come in 2025. Before that you will see this sort of move, but simple, forget about ICT, forget everything, just the simple, okay, um, very simple support resistance thing, go there, okay. You saw all these areas, that's the highest level, whatever it is, liquidity grab, market structure shift, people are expecting that it gonna go grab all these liquidities and eventually it gonna go zero. That's why he is saying it's going to zero, okay. But what I'm saying here is there are so many very good support resistance level, and why I'm saying support resistance, that's very important because that's what I'm gonna come to right after this, and I'm gonna give you guys some sources, some links, some videos that you guys should watch before you start your learning curve, okay. So this is a level that I'm gonna focus. Why? Because I should have, okay, let me just remove everything because it's not important for me on the Bitcoin. So you see this level, now look, I have some alerts as well. Are you serious? Oh no, not that one. Where is the alert? Yeah, Bitcoin crossing, shit, I don't know why I had those alerts over there. Anyway, let me remove that. So this level acted as a very major support, it acted as resistance, support, okay. This sort of level are very important for you, and Bitcoin is currently inside of that major support resistance level. Why I'm showing this is because, let me go, you see this video, I'm gonna come back to this, but what ICT is talking about here is exactly what I'm showing you here, okay. That's the support resistance level, and people who says like we target mostly the support resistance, that's bullshit. We don't target support resistance, we redefine the support resistance, as simple as that, okay. If you target support resistance, then you target like on the swing trade, you target something like this move for a month or two, something like that, or at least couple of weeks of move, not few minutes or few hours of move. Anyway, you target these things, you target the retracements to the support resistance or to the point of interest. That's what I'm saying. ICT redefined the support resistance, and I'm gonna give you a lot of example like that, but from ICT himself, but just stay with me, I'm coming there, okay. So what I'm saying here is, you see that midpoint, it's getting respected, although it don't make sense like that, okay. Midpoint getting respected, it don't make sense like that, but that's a very major level that Bitcoin is currently at, and previously it showed its support resistance from there. And if you are on the daily chart, that's the fair value. If I had to keep an eye on, that's the fair value I'm gonna see, like how price reacts from this area. So if that is the case, that's 36 to 37.7. so this $1,000 range, okay, 3600 what it called 36,705 to 37,739, that's the only place where I will have a look how it reacts from there. Why? Is because before every bull run there will be a very major correction, okay. There will be a correction first and then there will be a bull run. That's number one. Number two is, you see this equals here and maybe something here as well, around 15,000 level, if I'm not wrong, 15,800 or 900, something like that. 500. Okay, so these levels, it can come this far, nothing wrong with that, but I'm mostly focusing on these two. Okay, so if Bitcoin wants to go higher, it will come again to this 25 for 24,800 or 20, even lower than that. Okay, it will come there, it will maybe retest this balance price range, sorry, what it calls, measuring gap or fair value with another fair value together, this sort of area, it may come, take the liquidity, and then it can go higher. It won't go higher. You check the history of a bull run, every time there is a bull run, it gonna do like that. Okay, and as I'm saying over and over again, Bitcoin will never go zero, as simple as that. It gonna improve, it gonna come to a lot of things, because if it had to go to zero, it had a huge opportunity before. It had too many case, too many regulatory things that was coming to Bitcoin, and what happened is they won the case, they started spreading even better way, just like what's happening in Ripple. Okay, what's happening in Ripple in last couple of days is just because, like, from here it started, it in one day it made a move of 73.10%, because they won their long awaited, like 7-8 years old of waiting period finished on this day, and in one day everybody jumped into Ripple. But why I hate Ripple is because when I was like building my crypto portfolio, this shit is literally the third oldest cryptocurrency, and after that there came Solana, there came BNB, there came ICP, which is Internet Computer Protocol, who provides mostly all the blockchain security type things. However, this shit is the third oldest, and it's still sitting around 70 cents, 80 cents. It was because of the case that they had on their head, but still they didn't prove much during all these years. Ethereum from a few dollars to few $1,000 now. Okay, it went up to I think 448 or something. Yeah, nearly $5,000 on the US. Okay, but they are the third oldest, they are still 71 cents. That's why I hate them. And also the majority of like around 50% of these specific pairs or specific cryptocurrencies share, it belongs to the board members, to the people who build Ripple. Okay, that's why I hate Ripple. There was a huge dip like this, and you will see huge dips. All these dips happens because they had some sort of collusion in the members board, and then they started leaving the company, and then they sold all their shares. That's what happened during this moment. Anyway, that's why I don't like Ripple. However, if you like it, if you are watching my videos, if you are learning from them, you keep an eye, you look like on my channel, why I didn't actually show you, or whenever I'm doing the streaming or whatever it is, you see I have a 0 to Pro series. Okay, if you come to these videos, I started with candle. In this thing I said like this will be the most important thing. If you know where a candle opens, close, and what is the high and low, you will know 50% of your trading. Okay, share your very okay, I think I have already read that one. And identify swing high, swing lows. It's only the swing high, swing lows. I started from 0 to Pro. Okay, this series I called 0 to Pro because I want people to learn from 0 to Pro. And on my first and second live, I already showed you how I do my daily draw on liquidity things. Okay, if my bias on the daily candle, I see it's going lower, I only look for the sell short entry. If I see it's higher, or for the buy side I only look for buy long entries. But yes, there are other things as well. Okay, there are other things. If you know, if you observe the market, you will learn that, and on the same day you can go for both side as well. You can take some short entries on the day you are willing to go for long entries, because you will know, like, before going long it needs to actually create a low first. Okay, before going higher it needs to create a low. That's why I already talked about these things. If you missed it, I highly recommend you to go on my second live stream. You will find most of the things over there. Although it's a very long one, I will try to make videos regarding that. I don't really need views on my channel. If that was my goal, I would have shared it with like to a lot of social media things. I could have boosted my post on Twitter, YouTube, Facebook, a lot of other places. Okay, I didn't do that. I don't even have a proper Twitter account. Like, I don't tweet there mostly. Now recently few people asked for it, like few of my subscribers, so I just posted that I'm going live now, or I'm doing live now, something like that. Nothing else. I don't post anything. And during my fair value gap or gaps, you see here, it's a 1 hour long video. I talked about all possible gaps on the chart that I learned from ICT. But what I talked about here is, in one single video, what we expect from a fair value. I did not show you how we enter into a trade or how we use a fair value gap in terms of entering into a trade. Why? Is because I want you to observe these things. I told you that from a bearish fair value gap, like let's say this is a bullish fair value gap, what I expect from a bullish fair value is it should act as a support. As simple as that. I didn't tell you that if it reacts on the, or if it respects the midpoint, it will be a very high probability. I didn't tell you that. Why I didn't tell you that? I didn't even tell you that if it leaves some portion open, that is your breakaway gap, and a breakaway gap has a lot of good opportunities for high risk to reward ratio as well. Why? Because if it keeps it open, you know that price will not come lower than that. Okay, lower than the fair value gap. So what you can do is, you can just put your stop loss on the fair value gap candle itself. You don't need to, even you can put below the fair value gap with a little buffer, because sometimes we can cause some damage to you. And I'm not talking about crypto, but what I'm saying here is, this bullish fair value, we expect it to act as a support. A bearish fair value, we expect, or we have expectation that it should act as a resistance. Why we expect that? You should already know why we expect that, but I never told you how to use that fair value to go and look for a buy setup or sell setup. Why I didn't tell you is because I want you to learn by observing these things. If you observe, your eye will memorize it, or your, I don't know, like your brain will memorize it. The way you are learning from there, it will help you, like next time when you come to a market, straight away you will look into a high time frame point of interest, like that. Like, it's a huge fair value, but do you think like price is respecting this fair value here? Yes, you can say that, because mostly nobody closed over here. But it's a news candle, and first move, as always, even if it's a like crypto pair or cryptocurrency, first move is fake, second move came, rebalanced the whole area, and now it's slowly going up. It's not going up in one candle 74-80%. That can still possible for crypto, since I'm saying like it's only 1.4 or 1.3 trillion dollar market. Okay, the highest was 2.42 or 48, I cannot remember properly, but the rest of the money, when it comes into the market, it can do it every single day. Okay, and that's how I build a large portfolio as well. But that's not the point is, I'm not showing you how you can enter into a trade. Bearish fair value gap, my expectation is market should go lower. Now you can expect, where can it possibly go? You draw it, you look into the chart, you'll see how market is reacting. Now I recorded a video that turned out to be nearly 1 hour and 90 minutes or something, okay, because the same day I was actually streaming. I stream what it calls, I did the streaming for nearly 5 hours or so. So what happened is, when I recorded that video, let me see the size and then I can tell you like which one. Okay, this one. This is a video that I recorded. Okay, is this? No, that's the older one. This one, 9 GB or so. Here I was expecting a move during my silver bullet. This is New York PM session, okay, but I'm gonna come to this part. If I think my friend share a very important, if I see my friend is here, like Steven, if you're here, say hello, because I want you to be here before I go to that part as well. And Julie, thanks a lot. Bumsy, thanks a lot, brother, for joining. So during this day, let me just talk about this specific part for just a very short moment. You see there is a market structure shift, sorry, there is a liquidity grab and a market structure shift with fair value gaps. This is a 5 minutes candle, okay. In 1 minute it looks completely different. However, like, I was expecting a move towards the downside on a green, like the whole week. It's from, as you can see, the date is here, okay. It's from 0 I don't know, actually, let me check. 04 doesn't like sound good to me, because it's from previous weeks, I think Friday or something. So let me just check the properties. Yeah, so 4th November. Oh, okay, yeah, 0411 exactly. I'm an idiot. Anyway, so on that day I was expecting a move towards the downside after back to back green days like this, okay. Why towards downside? First of all, Friday, the last hour, you will have, like, even ICT talked about these things. You will see, forget about Friday, almost every day you will see the last hour will give you a small opposite move, okay. You see, like, weeks on the higher time frame, like on the weekly time frame, you will see something like this, okay. All these weeks that you can see below or above on a green candle, on a red candle or black candle in this case, it happens mostly on Friday, okay. It happens mostly on Friday. That's why I'm saying, like, even on the daily candle, you will see the last hour has created every day, it created some weeks, okay. For the red candle on the downside, or in my case black candle downside, green candle upper side. So before closing or before the market ends, it creates that every week. Now if you are here to like find some sort of a strategy regarding that, I'm not gonna give you that, okay, because I don't trade because of that, and I don't have a strategy like that. But what I'm saying here is, because it was Friday, even though this thing happened on the 1 minute, let me go actually on the 3rd November that I was recording. Yes, so where is my replay mode? Let me go to the 5 minutes chart and let's see if I can find out that a specific run or not. So it was on the PM silver bullet, right? 2 PM. No, that's Thursday. Friday, 2 PM. So somewhere around, that's the AM session. Okay, this is the PM session. I got it. 2 PM to 3 PM. Now on my recording, I wanted to post it, but when I saw it's a huge recording, and since I was actually speaking for 5 hours or longer before, just before that recording, my voice was totally nonsense. That's why I didn't even uh, edited that video or even bother to consider uploading that video, because I was doing so many things live during that moment. Okay, I kept that video because it's a good lesson for myself as well, but I will try to give you guys something regarding that. You see, there is a 5 minutes fair value gap over here, and the same fair value gap you will find on 15 minutes as well. Okay, so let me just put, actually remove my fair value gap and then made it BC buy side. Let me put like that. Okay, because it's the same thing. BC is for the buy side imbalance sell side inefficiency, and CB is for sell side imbalance buy side inefficiency. So rather than writing bullish fair value, bearish fair value, things like that, if you have on the higher time frame a lot of things like that, you can simply use BC and CB. Okay, so on the 15 minutes, you see like price was going up like this. Okay, this crazy for the whole day or the whole week, it's going up like this. Okay, so still, why I'm trying to take a short entry before that, I saw on the 15 minutes, because I trade on 1 minute. Okay, don't take it wrong, there is this liquidity grab, but why I didn't take that entry, or what happened during that moment, let me show you that as well. How far did I came from there? Let me check. Okay, so here to here, I had it drawn on my video, but I think this one, if I'm not wrong, because during that moment, let me see, I'll just put a line like this. Maybe that was the fair value or something. No, it's way above there. Okay, found it here, something around this area. So there is a sell side imbalance and inefficiency over there, or sell side fair value. Price tapped into that. As you can see, the wick, it took this liquidity as well. Then here, oh sorry, during that moment, I'm actually not making sense. Let me get back to my video. I actually forgot what I was looking at around that level. So London silver bullet, that was the one. I had it drawn. Oh, okay, now I know. So on the London silver bullet, I had a huge wick over there. Okay, this one. And if you don't know, what sits inside of the wick is actually fair value gap or order block. So let me just mark this wick. That was the one I was talking about. And this is the area I'm talking about. So let me hide the other candles from that area so that you can know. And I'm talking about only these two 15 minutes candle. Okay, stay with me, you will understand what I'm saying here. So when I saw price is rejecting from that midpoint of that huge upside wick, I dropped down into 5 minutes chart, and I saw that area there will be a huge order block with balance price range. This is why I said, like, now I remember. You see this? So let me just mark the fair value and the balance price range with this one. Okay, now we know where the balance price range and fair value gap is. I don't want to keep this anymore on my chart, that's why I'm showing it like this. Okay, so there is the 5 minutes fair value on the upper side and the balance price range. Okay, so inside of a fair value gap and balance price range, price took this liquidity on the 5 minutes, gave a market structure shift on the 5 minutes, but do I trade on 5 minutes? Not really, because it's a huge time frame to look into. But what I did was I actually looked and I marked all these things over here. Now I was expecting a pullback to the only fair value on 1 minute price created. Where is the only fair value? It's here. Okay, but price, it didn't created a single fair value gap after that. There are some other confluences, because this pullback is actually to the breaker block I can consider around this area. And why I was thinking that price gonna go lower is because there are already higher time frame confluences over there, like 1 minute, 15 minutes is the most important time frame that you can use for your analysis. Keep it simple like that. I will give you guys the videos as well. Okay. You see this really like equal, it's not even relative equal. Let me remove this one. Remember, this one had 5 minutes and 15 minutes. Okay, this fair value, it was on 5 minutes and 15 minutes, and you can see there are some order blocks that's coming out of a fair value gap as well. But I'm not gonna sorry about that. So I'm not gonna talk about that part. Just look into this exact equals. Okay, it's not even a relative equal, it's exact equal, it's clean. Whenever there are clean equal lows like that, price never leaves that untouched. Okay, so that's why I was expecting. But what happened here is, during this move up, it already took the liquidity and then it started going up. Okay, and it's why I'm saying this is because it took that liquidity, the same reason I'm coming lower. Okay, I'm looking for a sell short. Yes, there are some other things as well, but as simple as that. I don't make things complicated. Okay, I will show you why I'm saying this is because this equal lows it already taken before it went to my point of interest or fair value gap that I was anticipating to enter from. You see, it respected that fair value gap, it's respecting the order block as well, but it was a very good move towards the downside. And where it took that liquidity, it took inside of 15 minutes fair value gap. Now price is going up, and that's what ICT actually told on his market maker model video as well. Like, if you know what you are doing, you can actually go for both sides. Okay, I'm not expecting a lower run, but I'm expecting this liquidity to be taken and then market can shift to the higher side. Or if market wants, I had another 15 minutes fair value, I think right below this level as well. Let me have a look. So this was the other fair value right below this. Okay, so I was expecting at least a pullback to this level. If not, then this level was the level that market can possibly reverse from. And since there is this what it calls rejection block that in the form of support, in this case I was pretty confident that price gonna reject from this small little fair value gap. Anyway, let's get back to the 1 minute one more time. Usually I said during my silver bullet, I keep it very simple. These two candle, if it came here and showed this reaction, I would still look for some point of interest or some areas to go for a short trade. And if you have watched my videos before, if you have seen me trading on my channel, you will see some trade execution videos as well. If you want, you can have a look. I will be saying the exact same things over there as well. Trade execution videos, there are few of them over there, and I stopped posting them like 3 weeks ago. I posted the last trade execution video. The reason I already explained in my live stream as well. But if you are new here, the reason is a lot of people after watching this, like a lot of people who are trying to learn from my videos, after watching this, they are going here and there to learn everything in one day. Okay, and it's not possible. You need to put that time, you need to put that effort to learn. So that's why I stopped. Like, they straight away, people who knows me personally, they straight away started giving me um text messages like, what is this, what is that. They are asking about things that I didn't cover on my 0 to Pro series yet. That's why I got angry. I stopped posting videos for few weeks already. I didn't post. Also, I didn't quite trade that much during those weeks. Like, if you are here from the beginning, you will understand and you will know, like, I was saying these things, I'm not feeling like trading during this time. Okay, however, what I'm saying here is, that's when my silver bullet, PM silver bullet starts. And as I said, since I live in Australia, I don't trade the PM sessions silver bullet, because it's hard for me. It's like 6-7 a.m. in the morning when the silver bullet happens, and now my father is disturbing now. The whole week he didn't even gave me a single knock, and now he's sending me message after messages on the Facebook. Anyway, I'll call him later. So what I'm saying here is, if these two candle even happened, if it happened inside of my silver bullet, I would still consider an entry. Why I'm saying this is because I usually look for a 1 to 2 risk to reward, as simple as that. Okay, and this fair value gap candle, if you see, it's here and it went exactly to that area. So why I was waiting for this move, let me show you that first. That's the first swing low, OTZ. I think someone in my channel as well, he asked for, like, how do you define a pullback. Okay, so this is how I redefine a pullback. When this was the liquidity that I was looking for, that was the clean equal lows that I was thinking of targeting. Okay, or that I can see on my chart. Price came to that, took that liquidity, then started pulling back. So this is why I'm not looking for a entry over there. And another thing is, you see this swing low. Okay, yes, I know some people has rules like 3 consecutive candles that close above previous something. I don't even look into those things. But what happened here, like during from this low to this high, what happened? Is there a single little fair value gap? No. Is there any order block around this area? No. I mean, is there any inversion fair value around this area? No. What can be the possible reason that I'm considering this as my pullback? So this is not the pullback, right? So this can be a possible pullback. Where did it pull back to? The same area. But if I put my OTZ or the fib levels, you see, like, the OTZ even doesn't aligns with that one. Where it aligns is only with this pullback, but this pullback happened right before my silver bullet. Also, when its pullback, it already took the liquidity inside of a 15 minutes fair value around this area. So that's why I didn't consider entering. However, if it happened over there, simple entry, 1 is your stop loss. Usually you should target this, but if I upload this video, you will hear me saying that I'm not, even though price is respecting that fair value gap that I had over there. Anyway, you will see that fair value as well, because I was still looking into the market, so it's not here. But if I go see, like, the fair value that I was talking about. Anyway, but you will hear me saying, like, no matter what, I'm not thinking price is coming below this low anymore, because it's coming already from a 15 minutes fair value and it took the liquidity, and mostly back to back fair value gaps. The other one, price keeps it open for later use. Okay, anyway, you will you will get it later. If I upload this video, you will hear me saying all those things over there. But what I'm saying here is, since it took the liquidity and since it's 4.5 bar, okay, over there, I usually target 1 to 2, as simple as that. It delivered here. Now I'm on a reply mode, but as you can see, I had a small little, I think, inversion over there. I cannot, let me just remove this one. I was drawing a lot of other things over there as well, but I forgot actually where the things I was looking. So on the 5 minutes it looked cleaner around this area. Let me go and have a look. I think this move even came lower and hit that 1 to 2 as well. Like if I had that entry during that silver bullet. Okay, no, not this move. I cannot remember, but it's what I'm saying here is this thing, like the liquidity it grabbed before my silver bullet period. I didn't consider going for any lower anymore. Okay, and during this move, I think on 1 minute on the video, I found few places around this area for entering into a trade, and the buy side liquidity or relative equal highs was sitting. Let me go to 15 minutes because it's a long way back. Sitting somewhat around this area. Okay, the relative equals, and eventually price went there later that day, if I'm not wrong. I cannot remember, but I have it all recorded, so I will go and I will give you guys that video as well, because I also need to rewatch that video. I found a lot of value over there. And today, this is all the thing market is doing the whole day. On the 15 minutes, you can see, like, I cannot tell you anything. This shitty action I have seen after a long time. I mean, that shit happened something like here and now here. All these consolidations, let's see what happens during the PM session, because today I don't see any sort of I found your channel from T2 Rabi or BB. Okay, breaker block. Brother, what is the difference between order block and rejection block? Okay, order block and rejection block. The simple thing, order block definition is completely, I'm just giving you definition, but how you gonna use it is completely depending on a few other things. Okay, order block, simple. Let's say price is coming up from a point of interest. It can be your liquidity. Here it didn't take, but I'm just giving you an example with the chart. Okay, I'm sorry if I'm reading your message after a long time or something, because I actually forgot to bring my pop out chat window. So let me do that actually. Okay, and there goes a deleted message as well. Anyway, so let's say this is your higher time frame point of interest or liquidity level. Okay, this liquidity level acts as a support as well. Okay, when you see price was falling towards that liquidity, coming lower to this area, that's where you will mostly find your order block. Price took the liquidity, started going up high. For this moment, this is your order block. So okay, although like this is not a very good example here, because the time frame and the move that I choose, it's very shitty move over here, but just think of it that it's a major liquidity level that price came into. So liquidity level, it's also your support level. Mostly price takes that liquidity, then it starts to go up higher. So that's why I'm saying it's also your support level. And if you want to know it from the ICT, I'm gonna give you the video that ICT talked about this, and also I talked about this in my channel as well. I have so many things, like I play games, so I have some gamers over there. I am a programmer myself, so I have some programming channels over here as well. So yes, I have a lot of channels subscribed here. So you go to ICT's channel, search for order block, and you will find the video here. Okay, core mentorship order blocks. Here ICT actually talked about
have the capacity.
So price is falling, the last down close candle before a upwards move, that's your order block. But where it's coming from, you see he wrote here support level. Yeah, on the real-time chart I will show you. So on the next photo he will show you another order block, which is another red candle that is coming from this order block, because this order block already is coming from a support level. So if there is another black candle around that order block level, that will be a new order block. But there are some other rules. If you want, you can go and watch this video. Let me go to the live chart and you will understand. Okay, you see, like liquidity, he will say like price was falling, came to a support level in the form of liquidity. It took the liquidity, moved higher. There are so many things over here. You can come, you can watch, because on this 35 minutes 47 seconds video he talked only about the order block. Okay, so you can understand like how big of a thing it is. But in short, for any move, a downwards move, this green candle is your order block. A upwards move, this extreme red, or in my case black candle, is your order block. Now which one to use, that's where you need to have a higher time frame point of interest. It can be your liquidity level, it can be your fair value gap if there is any, things like that. Okay, it can be your previous order block as well. So that's what you need to look for in terms of selecting your higher probability order block. Now another thing that can happen is your higher probability order block will give you something like this. Okay, it's like the size of your order block and the size of the next green or up close candle or down close candle, depending on what sort of order block you are looking at, it will be bigger than the order block. ICT talked about it. And if you can find a fair value gap with your order block, these sort of order blocks, they are kind of high probability, but that depends. Okay, perfect, thank you brother, I understood OB and BB, but was asking the rejection block, what relationship this has. Okay, relationship is, this is a break of structure. Okay, why I marked it here. Okay, just why I marked it here is because it's a swing high, a swing low into a point of interest or fair value gap. It broke the structure. So why I'm saying this is because you need to actually that's why I said like today I have something to share with you guys. Okay, so you see this ATM method. I don't know what ATM stands for, because even ICT didn't said it in his video. Okay, maybe somewhat around this area. Okay, ATM price action pattern, I cannot see it. So what he is showing here, I'll just go and give you guys that. Okay, why I'm saying rejection. So price was rejecting to go any lower, that's what I'm saying anyway. But here you can see like it's acting as a support, and when price is coming down towards that area, it acted as a support. It came here, rejected to go any lower, it send it higher again. That area, just look how many times price actually reacted from that. Okay, I hope you got my point, but I'm gonna come to this part because it's already over 1 hour or so, and today I have no intention to make it bigger. And since Australia increased their daylight saver, or added their daylight saver, and New York also added it already, now I'm messed up. I have 2 hours to uh, wait in addition from now on, and I cannot do that. It's already 4:30 a.m. in my place. By this time, it could have been the PM silver bullet, or even nearly the end of the session. But now I'm messed up. Like, I cannot trade anymore because I cannot sit in front of my computer every day until 4:30 or 5:30 a.m. I have another job. I have my own projects to complete. So yeah, that's a huge problem for me. Anyway, what I'm saying here is this video. It's a very good video from ICT. This video was published a long ago, 2017 December, when ICT was actually talking about the support and resistance. Okay, but why I'm saying this is because what ICT is showing us, okay, don't get me wrong, let me redefine it. What ICT is showing us is why a level is a support, why a level is a resistance, why price goes higher than a level but it doesn't sometimes close higher than that level. Like here, it it came lower than that level, but it didn't, like, how far it went, but it didn't close the body lower than that level. Why that things happens, I hope you already know, because that's the liquidity graph. But
Right.
what is happening on the support resistance level, he actually showed here. Like, he looked into those curves in 1 hour time frame, when price breaking those levels and then retesting that level, he is showing a entry pattern that you can target. And where is your stop loss? At the highest level. Okay, this was the earliest stages of ICT, so I think you already know he has evolved a lot from these areas. Okay, but what I'm saying here is he's showing these things. He's showing you why you need to watch this. You don't need to watch this to know how to enter into a market or support resistance. What he talked about this specific candle, like, let's say this is the lowest body close, or in this case this has the lowest body close for the down close candle. What is this candle? It's your breaker block, right? High, low, higher high, or higher high, wherever you take it, because after that there is nothing. And I think there is some sort of volume imbalance or something, because after a green candle closing here and the next black closing here, the market opened there and started coming lower from that area. So anyway, high, low, higher high, the last down close candle, or the lowest body with what it calls the lowest down close candle with the lowest body close as well, that's your breaker block. Although if there is a set of the same color candles, the entire set will be your breaker block. But if you want to see the respect of your price, you want to look at the extreme on everything. Like for the order block, for the breaker block, you need to see at the extreme on. Okay, so on that specific thing, you can see, like, he is marking the lowest level here, but price went up to that breaker block area and then it started coming lower. Anyway, that he redefined later on. He redefined, like, even the inversion fair value was not there before, like his core mentorship thing. It came after 2022 model. Okay, so what I'm saying here is what retail trader trades, or sorry, what support resistance trader trades, it's kind of the same thing, but it has redefined everything, that why price should go here and then come lower, why price is coming to a certain level and then going to the opposite direction. This sort of things ICT redefined. He pointed out every single thing, he gave the definition, he gave it a name that suits actually the things as well. Break or block, why? Because break of a structure or market structure shift, the first break of a structure to the opposite side is your market structure shift. Okay, but there are some other confluences, like it cannot be any sort of break of structure. Okay, it has to take some sort of liquidity, it has to do fulfill its cycle. What is the price does? So it goes liquidity to liquidity, or imbalance to imbalance. Okay, or it has 3-4 different ways to do it, but I'm just like, mostly it calls internal liquid, internal to external, or internal to internal, things like that. But what I'm saying here is it does it in a pattern like this. Okay, so it will take buy side, it will take sell side, but which buy side will which sell side, that is internal and external. If the market is bullish, you will look for the external buy side. Okay, and if the market is like bullish during that moment, it will take internal. Like, what is internal? Look how big the run is. Okay, among that run, price created some swing lows. It didn't give you any sort of market structure shift that can consider like it's coming lower for these things or even lower for these things. Yes, maybe by now you can see a lot of things, you can think of it, but I'm not convinced yet, because there is nothing around this area except for here, and maybe on the weekly and daily there will be some other things. Okay, I don't know why I have it like this, because I think I have hidden all my drawing. Let me remove this one as well, and let me show you like what I mean by that. Okay, let me delete that as well. What is my important? Okay, forgive me for this, what it calls, this poop colors or something. So that's the weekly fair value. That price previously retested, came lower, and then took the liquidity, and now it's going up like this. But what I'm expecting, I don't know what gonna happen next, but what I'm expecting, it's my expectation. Okay, I'm not saying it will be happening next, or this is what is going to happen every time. Okay, it's my expectation. I'm expecting that since on the daily, weekly it gonna take 7 days to finish, but since on the daily every day is closing above the previous day's high, today I'm expecting this buy side liquidity. E-mini still yet it didn't take it, but Nasdaq, it already took that liquidity, and I was still bearish. Okay, like even after this move, I'm not done with my downwards thought process or expectation. Because why? Price took the liquidity from low, closed below. In ES took the liquidity, closed below. Even though there is a volume imbalance, market opened higher at a higher level than the previous day close, still it took the liquidity, closed below. So I'm not done with my downwards move, and this liquidity is due. If you are new here, if you are not in my first and second stream, I suggest you to go to the place where I was showing this thing, like just fast forward to that area and then start looking at that. So this sell side liquidity is due, that I told on my previous streams as well. But why I was expecting a upward move is because all those influences that I can see on the left side, as simple as that. Now around this area, what I wanted to see was like my expectation was, okay, that was my expectation. I was willing to see something like this fair value, or at least something like this order block, okay, can hold the price. Yes, it was like during this day it was respecting that order block area for few hours or something, if I'm not wrong. Let me go to the hourly and let's see, like, okay, so especially this one I'm talking about. Okay, so it was somewhat respecting that order block line, but eventually by the end of the day it closed above. That's what I was not willing to see. I was not expecting to see, because I know that market is not done with its downwards move. Let me rephrase it. I'm thinking that market is not done with its downwards move. Now here it's giving me some conflicts. Why it's giving me conflicts is because in US 30 it created equal. On the Nasdaq it took the liquidity. On the US 500 or even S&P, it didn't even reach for that liquidity. Okay, it's conflicting. However, if you look at the mean threshold of your order block, it's now there. Either way you look for it. Okay, now ICT made unintentional mistake in few of his videos, saying that order block mean threshold is the body of the order block. Okay, body of the candle, instead of saying it's the candle, whole candle. Then my friend showed me a couple of places where he said it's the entire candle's 50% level. Now it created conflict between me. But what also ICT said, and based on that, what I believe is I should look for the mean threshold at the body level. Why? Is because you will see every ICT trader always talking about the body, where candle body is. Wicks, they cause damage, but wicks are less important than body, comparing to body. Okay, where it closes, where it opens, that's the most important part. So if that is happening anyway, what you want to see for a candle to do, like, it's respecting that important parts 50% level, or it respecting the 50% level that has some damage causing part or unimportant part with the important part. Yes, you will see sometimes better reaction to that, sometimes you will see it didn't even reach for that mean threshold. But if you see that it's actually respecting this midpoint, a candle's body or a order block's body's midpoint, I feel like that's a better indication for you that it's actually respecting that order block or that candle. Okay, anyway, it's respecting here either way the mean threshold. Okay, it's respecting. However, I don't want to see this respect anymore. That's my expectation, that there are some relative equals. Since market is doing this, the weekly candle is a huge candle, I'm expecting price to go and take this liquidity, maybe fill up the unfilled portion of the previous order block, previous fair value, or it can go for this fair value as well. Also, if you remember from my fib level, the optimum trade entry or something, you see both of the fair value gaps are aligning with my optimal trade entry. Okay, with this 627 on 79, this retracement to that level is actually giving me that. Okay, if you are talking about this move or even this swing, let's go here, although it's a break of a structure as well with a swing high swing low over there. But why I'm not taking that, I'll show you that as well. You see that 627 on 79, it's aligning with this one, and price didn't go there with this move. Now this move already is coming from a fair value, took the liquidity on the left, and I'm expecting price to go even lower where, around this area. Now I'm gonna give you a video regarding this optimal trade entry, or who was using it, things like that. Okay, you might need a -1 as well. So -1, I had it before, but let me just put it something like this. Okay, and -27, -1, and there was another area that I'm gonna put right now, which was -0.62. You see these three levels, this is where price should come with his next move. Like, this area, this area, and this area. Why? Like, that's my expectation. I'm not saying this is the area price should come, okay, but that's my expectation, because it already took the liquidity from left, although the data is deleted on this specific contract. That's why I usually like to use the ES for talking purpose. Okay, so it took some major liquidities around this area as well, and it took some major liquidities from here. It has some relative equal lows over there, few drawings I have over here. Anyway, the levels that I'm drawing and I'm showing here, why I'm drawing this negative 0.27, 0.62, 0.1, sorry, negative 1, this sort of area, where did I get this from? So first thing first, you go, you find this on ICT Forex, okay, ICT Forex, ICT ATM method. Okay, what you can do is you can go to ICT mentorship channel, you can go back, you can search here the ATM, okay, ATM, I think just ATM gonna give him here the ICT ATM method. You watch this video, it's a 14-minute video, you watch it, you will find a lot of other things here, okay, and this video was posted 5 years ago. Now that's one of the video I wanted to talk about, and this is the video that I was talking about. Why you should watch it is not because I'm here to prove that ICT was using support resistance, or ICT is actually redefining support resistance, not because of that. Why I'm here and why I want you to watch this video is because in this video he started with a 1 hour time frame, he marked all those things, he talked about this actually, that's what I'm saying, like from a higher time frame towards a lower, like on the higher time frame perspective, that was his stop loss, that was his take profit. Okay, now on the lower time frame perspective, how you can move your entry, how you can reduce your stop loss size, and how you can manage that take profit area with similar pips but less risk, better entry, those type of thing using a lower time frame. First the analysis will be done on the higher time frame. If you are having issues regarding that, that's why I'm showing you this specific thing. Okay, that's why I'm telling you this. And also ICT never told you to be a slave of 1 minute. Okay, don't be a slave of 1 minute. If 1 minute looks confusing to you, if there is no fair value, okay, let's say there is no fair value on 1 minute, but you are seeing moves like this all the way, what you gonna do? You're gonna wait until you see a fair value on 1 minute? What ICT told you to do? If you have any idea about what he talked about regarding the time frames, he said you need to find your optimal points in between, like 1, 2 and 3. Mostly 1 and 3 are the frames where the algorithm runs most of the time, okay, and lower than that. But on the 5 minutes, 15 minutes, if you have better vision over there, remember guys, when in doubt, zoom out. I'm always saying this and I will be say this to you. Okay, why I'm saying this is because you will see a lot of the time, like let me give you this one. Okay, 15 minutes and today's price action. You see here, what the hell is that drawing? I really don't know what sort of drawing is that, but what is this anyway? So you will see on the 15 minutes time frame, today's price action looks something like this. Okay, now this specific part, if you see, there is your a break of structure. What sort of break of structure? Market was going higher, that sort of break of structure towards the liquidity. Now from the daily, I already have the bias that market gonna go and grab this liquidity. Yes, it didn't grab here, it grabbed on the ES, it grabbed on the what it calls, sorry, it grabbed on the Nasdaq, it grabbed somewhat. Why I'm saying it grabbed on the US 30? US 30 has exact equal highs over there. But why I'm saying it grabbed from here, have you ever got stopped out at this level? When price hits your exact same level, you get stopped out, or you need to go higher than your stop loss to get stopped out? Just tell me about that. People who got stopped out in their trading, tell me. If let's say I have a trade entry that looks something like this, okay, something like this, and this was my stop loss. Where did I get stopped out? Like, if price goes above that, or when it hits my stop loss at stop loss level? When did I get my stop out? When it hits the level. So that's why I can still consider, I don't need to consider it took the liquidity or its equal high or whatever. Simple, just come here during this move. Okay, this is a small little weak. What happened on the 15 minutes is, it already, like, that's my daily bias. This is my daily buy side liquidity that I'm expecting price to take. Okay, why there is a huge car outside right now? Are you kidding me? Oh, it's Monday, the rubbish collection day. Holy shit, the timing, bro. Anyway, I hope the noise of the car is not making you guys disturb or anything. So price is coming out of a fair value gap that it recently retesting or retested. Okay, it broke the market structure, it created another fair value gap around that order block level. This is not a entry, I'm not saying that, okay, but why I'm showing it is because that one simple fair value gap with order block, how many times price came there and got rejected, came there, got rejected, still price is failing to break that level. Why is that? From the high it's coming to that level, it still didn't grab that liquidity, although on the NQ I'm saying and showing over and over again that it already grabbed that liquidity. And you see, like, you have two fair value gaps back to back around this area, and there is your extreme on that. You should, if you are trading NQ, you should keep an eye on this fair value. Okay, how price is reacting on this fair value. I hope I'm on the 15 minutes anyway. And there is a small little fair value and there is a bigger fair value, but let's see where price is going. I don't trade NQ, that's why I don't have a lot of things drawn over there. You see on the 15 minutes this fair value got respected. Yes, we came below it for the lower fair value gap or the breakaway gap, however you call it, or if this is your breakaway gap, you keep it that way. These two together I call it measuring gap. Okay, even I got it from ICT as well, so I don't know, like, if you guys will accept it or not. However, low again, it's still above that fair value. See, it tapped here, took that liquidity already, it took some liquidities from the left as well, but it is still respecting this one, although it came here multiple times, and until it took that liquidity, it didn't give me any setup to go for that high on my ES. That's why I didn't take any entry during my London silver bullet. Okay, so the London silver bullet starts from 3 a.m. to 4 a.m. This is 3. Oh, is that Friday? I'm looking on the wrong area, sorry. So 3 a.m. to 4 a.m. Now there will be a lot of people who will find entries over there. Yes, I can see there is this. Okay, I can see there is this 15 minutes fair value. That's what I marked on the NQ as well, this fair value gap. But based on what I'm gonna take this entry, it didn't take the liquidity from left. It created, I think, triple or 4 equal bottoms over here. Now if seeing this, and if you consider this or any of these as your market structure shift, only then you can, after seeing the candles, find your entry setups. But when price left all these things behind and giving you a bullish fair value gap to go for long setups, I don't know if you can go for it or not. I cannot. Okay, I simply cannot, because my bias during this moment. Okay, let me show you another thing. You see the Asia session, during this specific session, what price did was it took the Asia sessions high. You look at the Asia sessions low, there will be your equal lows as well over there. Okay, forget about this. Look at here, in 1 minute that looks something like this. Okay, this is your chart. Now after looking into the chart, if you can find any setup, you are welcome to take those entries in future, but for me I cannot. When I saw these many equal lows are still behind and it's giving me a bullish fair value gap to go higher, okay, I cannot take that entry. That's not how I trade my silver bullets. I trade my silver bullets, if it takes the Asia session high, I will look for a sell short entry, as simple as that. Okay, no matter what, I didn't even bother to look for a buy long entry around this area. Why that is because even the market, the way it was moving during that moment, it was giving me the indication that it gonna come and grab this liquidity later. So I was waiting for my sell short entry here, and eventually this is your Asia session low. You have multiple liquidities like equal lows over there as well on the lower time frame, exact equals, then these things. I think price currently is here to grab that liquidity, or yes. So finally it took that Asia session slow here. That's what I was expecting, although I didn't look what happened during these moments. Otherwise maybe I could have found some entry setups during these moments. But anyway, I don't bother about this. It gonna come every day. So like every day means every week I will have opportunities to take entry. So one day if I'm missing it, I don't really bother that much. And this is the move I was actually looking for during that London session. Usually London session is bit clear, the silver bullet, but today I think because of the daylight savings or something, or if there is any event in the midnight or not, I don't know. Usually there will be no event during the midnight, but this was the move I got during my silver bullet session. That did not take, like, it's creating consistently equal lows. You see the equal low, there is another low that it kept intact, another low it kept intact, multiple lows like this way. Okay, so it's like following a trend that starting from even lower than this, but it's going up like this. This is a trend of liquidity that it's generating until it actually started coming lower from this area or something. It didn't even grab the liquidity from the buy side. That sort is more disturbing to me. So from now on I might also keep looking into the Nasdaq, because Nasdaq chart looks more clean. Like during that specific moment, just look how the Nasdaq chart looks. This was the Asia sessions, this is your London session. I mean, candles here are more clean, like how clean the candles are over here, and on the ES it looks like this. Is there a, like, what sort of candles are these? Anyway, so I will have a look on the Nasdaq from now on and see like how Nasdaq works during the silver bullets. If it works good. Like I have backtested ES, but I didn't backtest Nasdaq. If it's good for me, I will go and shift my trading towards Nasdaq anyway. So the one video that I'm giving you is this one. The other video that I'm talking about is this one, but you don't really need to look into this video. It's the ICT optimal trade entry. If you want, you can do that. He's talking about a lot of things, like where he enters, where he puts his stop loss, where he targets. It's mostly like that. If you want to learn about the optimal trade entry, then on the ICT channel, it's also 5 years or 6 years old. Okay, intro to ICT optimal trade entry. You go to this, you will find all your settings, this target 1, target 2, and the systematical swing or whatever he has written over here. Here is your percentage. You can see like 6271, which is 705. I already told you regarding 71. Then 79, all this, it's exactly what I just showed over here. Okay, even this negative 0.27, 0.62 and 1, it's here in the video. If you want to see here, 170579, and then for the target here it comes negative 2762 and
0, negative 0.62, negative 0.2705 for the sweet spot for optimal trade entry. That's the price level I'd like to see price trade to, and 79%. And we have our target levels, which is 0, negative 0.62, negative 0.27, and then negative 1 for symmetrical price swing. Okay, and then the same as.
So I hope you got that, and since I have it here, you can just take a screenshot, or you can take a photo of it, and you can set it for yourself. So that's another video for the optimal trade entry that ICT talked about and that I showed you the other day. So what you want to do is you want to target or make your first target around the 0 level. If like what gonna happen during the optimal trade entry, let me talk about it a little. Okay, so let's see, let me remove this one. Object tree, where is your Nasdaq chart? Here. So if you find your fair value gap, and I think Steven, if you're here, say hi so that I can actually show you why I'm saying this. Is I saw you were using only 2 levels, okay, like the 6.2 and 7.9. Since it's at the middle, you didn't use it. But what if there are 2 fair value gaps that are aligning with the same level? What you gonna do with that? If let's say I don't have my 7 on here, okay, and I'm just putting this 2, like finding a shortcut. You know, before I used to had a mod. What was the mod is I added like 6.2 plus 7 on, then divide by 2, whatever the midpoint is, I choose that, and then 7.9 plus 7 on, whatever the midpoint, I divided by that. So I had another levels that looks something like this in the middle, because all the time I saw like either of these levels are actually getting the fair value gap. That's why I created a mod for myself. Okay, but all the people around the world, they look for that 6.2 entry, and ICT will around this level. He was actually talking that where he used to enter whenever there is optimal entry setup is happening. Okay, he used to always look for the entry at the 6.2 and stop loss at 1, targeting here the 0, then the this is what he's saying here is fast profit. Okay, or a scaling method, like every level it hits, you close some of your position, things like that. So his entry was always that 6-2, stop loss at 1 or 100% level. Like if it goes, he also says like if it goes below that 7-9 percentile, then he wants to look for some possible areas to exit out of the trade, things like that. You have to watch this video to, if you want to learn about this optimal trade entry thing. Okay, now that one video from ICT, the ATM method, another video is optimal trade entry, come from ICT, that is 6 years old. If you want to like watch it, you can go have a look into that video. Now there is something that I want to, okay, so I didn't finish actually this one. Yes, so sometimes you will see that a fair value gap will align better with your upper portion, and there will be maybe a little part of a fair value gap with your lower portion. So in that case I would mostly look for that 7 on entry. Okay, that's why I had these levels, and also these levels are fully calculated means no matter what happens in the market, if you, let's say you target 1 to 0 like this, okay, like you always enter into a trade from this 7 on level, you target that 0, you don't even go for this, stop loss at 1, just set this up, take profit, stop loss and entry points, create that limit order by right clicking and clicking here, create limit order. No matter what happens, every time you are right about your entry and your analysis, you're gonna hit that 2.4R. okay, now I usually target somewhat around this area, and I usually target like 1 to 2 risk to reward. But if the drawn liquidity is too far from my 1 to 2 area, too far means let's say this is my 1 to 2, right, but the drawn liquidity is around this area or around this area, in that case I would still take some partial off at 1 to 2, then I will take some partial around 1 to 3, and then I will keep the rest for my full partial or something. If that is not happening, what I will do is I will take the partial at 1 to 2, wait for the market to give me some sort of break of structure at a lower time frame, or maybe some sort of point of interest where it can pull back to, and then it can go lower. I will put my stop loss to break even or even at some profit. Let's say like in the market there is, let's say like there is this huge weekend candle, okay, just for the example, don't take it for granted or something. There is this huge wick, why I went into the settings I don't know, and I'm seeing that market is respecting, like it's a move, and then I saw market is respecting that 50% level, and then it's giving me some structural shift towards the downside. I can just bring my stop loss. Okay, so with this I won't be able to move it because it only goes to this far, it won't come to the positive side or other side. So I will just draw like this. So when I saw there is this sort of break of structure happening, okay, let's say there is a fair value gap that market already retested. So what I do is, when that fair value gap is, let's draw some imaginary fair value gaps, okay, so market came lower, it gave a retracement into a fair value gap, then it gave a break of structure around this area, okay. When I see something like this, then I consider moving my stop loss in profit around that fair value gap candle, like either here or here, depending on what is on the left. I saw there is this inversion or bearish inversion fair value, okay. So I'm hoping that since this area, let's say this fair value and this fair value, I'm hoping that since it is aligning with each other, it's most likely balanced price range, that price already came and retested or balanced, and then it's going down. So I will move it to little lower around this area. When it broke the structure, if there is any fair value, let's say it retested here and then started going lower, I will move it to around this area. step by step. I'm not moving straight like I saw a move. I'm straight away moving above this candle's high, or I'm moving around this area and then the next candle opened, and then I'm not moving like that. Okay, if I ever think of trialing, although I trial very little, like mostly I don't do that. I usually get out of my trade when 1 to 2 hits. I get out of my trade. Okay, unless let's say 1 to 2 is um let's say this is my entry. That's the fair value, sorry, that's the liquidity that I'm targeting. And I'm just to make it understandable, I'm showing you this. Okay, and this is my 1 to 2 risk to reward. Okay, what I do is, if the liquidity is this close from my 1 to 2, I'll maybe consider going there. If not, I don't even consider that. And as I'm saying, every time I move, like I go for higher liquidity at 1 to 2, I try to take partials, even though it may be in future or later on it may be give me the full take profit or full potential. I don't care about what happens in the, if you watch my if you haven't watched my trade execution videos, I highly recommend you to go and watch just at least one video from these trade executions. Okay, where is it? Here, any of this. Okay, silver bullet 5% or 3.2%, whatever, like any of these videos, just go and watch. Okay, and why I'm saying this is because I, in every single video inside of this playlist, I already said that after I take my profit, I don't care what happened in the market. Yes, if it's too early that I already got my profit, I will try to read the price for as long as I'm sitting in front of my computer, but I don't bother to take another entry or look for another setup. Why I do that is because I want to finish the day with a positive day. Why? If I finish a day with a losing day, the first thing that gonna affect me on the next day will be the emotion from previous day that I lost some money. Let's say I made some profit, then I became greedy, I started trading more and I made mistake, and then I lost some money. What gonna happen is I'm gonna mostly fall into revenge trade. Okay, why? Is because I had a huge profit. Now that profit is gone, also some of my balance is gone. I will be mostly revenge trading. If something like that happens, the revenge trade will even draw you down for like better loss or more loss. Okay, it won't give you any sort of profit, or you won't see that profit. Okay, as long as you are revenge trading, I can write it down that you will never see or never become a profitable trader. That's why every day, every single video that I have uploaded, it's either only one, or the day I'm doing it, revenge trade is cancer. Exactly, it's cancer. It's just like cancer. That's why I want to finish my day with profitable day. Okay, and that's why you will see, like, I showed it multiple times, but I'm showing it again. The reason behind that is I'm not trading for last couple of days. That's why I don't have another week's worth of trade report here. You see, like every single day I have profit and it's around the same level. This $30, this $389, if you go to the video that I have uploaded before this one, you will know that I'm already talking about these days. Okay, that I did not, this day I had I entered into a trade. I was planning to watch the cricket match, the World Cup match, with my friends. So I just closed my trade and then I went to my friend. As simple as that. I didn't even wait for my take profit. Yes, some people will mock after hearing this, but what happened on the other day? You see, like 1175, I closed early, I took the profit, I went and spent time with my friends. I came back the next day, like 11 12. Okay, 12 October 1296, 13th October 1000. So why should I bother? Like, just yes, I could have made some more profit if I had that position opened, but the problem with that is I cannot concentrate with other things when something else is going on that I was involved with. Okay, that's my personal issue. That's why I closed it and then I went to my friend's place. As simple as that. If you go to my channel's community area, I have shared my couple of, like, October last week or something. Yeah, the October last week, 24th October 1200, 26th October 1000, 17th October only 183, because I took a loss on the AM session. On the PM session I got, if I'm not wrong, that was the case, that I got that profit back. And what happened is I had, like, I recovered that loss and I had a small profit. I didn't look for another entry, only 2 entries, that's it. 30th October profit, 31st October profit. That's my funded on. The new challenge account that I took on the 27th, the same day, I had the same trade going on, but on this one I had a better entry. That's why the profit was bit higher than what is here. Okay, and the loss was bit lower than what here. Why? Because after placing the order on this account, I have to switch to my other account and then I have to place this order. And I don't know why they don't allow me to log into two different accounts with two different window or tab on TradingView. I don't know, but anyway, cause same account they don't allow. If I log in from my desktop and I log in from my laptop again, it will either sign me out from there or it will cause an issue that it will non-stop give me error, too many devices trying to log in simultaneously, something like that, and I have to contact the support and to fix that. It cannot fix automatically. That's a very big issue for me anyway. So by the time I switch my account, I already got a better entry here that I took the loss, so the loss amount was smaller, and the one I got profit, that one also I got a better, like 1 tick or 2 tick above my entry on this account. That's why it's like that. You see, like, here I have 1011, here I have 1020, here I have little extra because it was, I think the account size was bigger than what here you can see. Like, I have already 24, 26, I have 2000 to nearly to what it calls $2250 nearly profit. So every time I'm risking that 1% or less than 1%, it's taking some amount from here as well. So every time it's going up, it's taking some. That's why it went little bit extra over there comparing to this account, but it's nearly the same thing. Okay, same day, same thing. Anyway, why I'm saying this is because, don't you think, like, if I trade London AM session, if I'm making that profit, and then there is New York AM session and PM session, if I get any setup, if I entered into the trade, don't you think that I could make some more money out of that after looking at these things? But why I'm not doing that is because it's already more, like, you cannot even imagine how much more than enough it is for me. Okay, like, by how much the margin, how much bigger the margin is. Even this $283. Okay, I showed it already, but I'm showing it again and again just to give you guys the thought that I like, I keep inside of me when I'm trading. Okay, the way I look into the market and the opportunities while trading. Okay, because you have to have that control. You cannot ride into every single train or bus you see on your bus stop or train stop. Okay, you need to have the correct bus at correct moment when you can jump into that bus or that train. As simple as that. On a single stop there will be multiple buses or trains that is coming, and that will go to a certain direction for a while and then it will change its direction, isn't it? Let's say I live in Australia, although I have a car, but sometimes I may use the public transport as well. So don't you have the same spot for multiple routes? I don't know how to finish that sentence actually, because I hope you are understanding what I'm trying to say. So from the same stop there will be buses coming, stopping, picking up passengers and leaving for different routes, right? So you will see that route will have some specific part of your journey in common. Okay, it will, the bus will go, let's say for 2 or 3 more stops, the bus will go towards the direction you wanted to go, and then it will change its direction to the left or right or something else. Okay, exactly same thing gonna happen in your market, in your trading. If you like, the more you make hurry, the more trades you try to enter into, the more directional mistake you will make. As simple as that. People who are profitable, they don't trade 5 trades a day or 10 entries a day. People who are profitable, they don't even trade every day. Okay, think about it. Every day will not be a trading day. Forget what others are showing you on the 1 minute for scalping, these that. If every day is a winning day, why ICT doesn't trade every day? Why he takes days off? Why he says on his live or on his Twitter space or other things, ICT himself, he says that this week for Monday, Tuesday, or this week I'm not gonna I'm not that interested in trading. I'm gonna observe the market. If this happens or that happens, then market can change its direction. I'm gonna uh, tell me if I'm telling lie. Tell me if I'm not correct about these things. Why ICT talks about that? Because every week, every day won't be a winning day. Okay, that's one thing. So if you are still here, if you are watching, these two you must watch. Number 3 is this specific video from a different person and different place. You watch this video. This is a video that is consist of, I think, 4 successful traders in one single podcast. Why you should watch this is because they will give you so much knowledge and information that no one else can give you. As simple as that. You go and watch this specific video if you have time. Okay, it's a very long podcast, but at least watch the first 30 minutes. They have so much to tell you. That's video number 3. I hope you are taking some sort of screenshot, or you are looking into like, I don't know, like how, whatever it is. If you are actually here to follow or listen to me, I highly suggest you to take a screenshot, or at least save this specific video or title somewhere. Write it down, or whatever you want to do it. Watch the first at least 30 to 40 minutes of this video. And the most important, that I want you to watch by 100%, like 1 hour and 30 minutes or something. Trust me, this will be the best video that you have ever watched regarding trading. If you are not watching this video, or if you cannot watch this video, save it, add it as your watch later, or if you have any playlist or anything, save this on. Watch this guy. If you don't know this guy, search here. Okay, this is his name. Search his name. Try to know. He is a 8-figure trading mentor. Mentor, do you know what that means? He is a mentor. 8-figure trading mentor means, I hope you understand how much money he handles every day. And his background, I'm not gonna talk right now. The first 5 to 10 minutes, if you feel bored, you come me next time on my channel, or you comment on my any of my video that whatever you said about that video, I didn't find it any interesting or anything. I will stop posting video from next day. Okay, just one person, if he says that he didn't find any value from this video, I'm gonna stop posting immediately. Okay, just let me know. That's an open challenge. Although I'm a YouTuber, I'm trying to provide content to you guys. This video you must need to watch, and you must need to digest the information it's giving you. You just don't watch and like play it and then keep it until it finishes its duration. You don't keep it like that. You need to watch it and then you need to finish it, and you need to listen carefully what he has to offer and what he has to say regarding that. Okay, so this is the most important video that I hope I can provide to you guys. And after this video, if you have any sort of question, you come to me, I will give you the answer. Okay, so I think these are the things I actually wanted to talk about, but somehow people missed my intention from the beginning because they are too focused to trade every day, and I don't know if they are actually learning anything or not. Because if they are learning, they had so much opportunities to like so many opportunities they have missed already from the market. Okay, if they were learning. BTC, where was it? Yeah, coming down from source of this one, that one. Hourly bearish fair value, sell side imbalance, buy side inefficiency, but that was not the only thing that I was looking around that area, because there was this as well. Okay, on the weekly, was that the thing that I was looking for? And then there was, I think, something around this area, right? Where is that hourly fair value gap that I just draw? Okay, it became so small that I cannot even see here, but I hope you got it. So that's the weekly sell side imbalance, buy side inefficiency. Okay, or weekly bearish fair value. What the hell? So weekly fair value or something. I stepped there, took the liquidity on the left as well. I saw, and I remember, and from here, that's your hourly fair value. It took liquidity from these areas as well. On the 15 minutes, it looks something like this. Okay, so people who trade crypto, this is for them as well. And remember, that's your hourly. Okay, it's coming from a weekly. On daily, on the left, there are so many levels. You do your own thing, that if this short is a possible short or not. On inside of that hourly fair value, or like bearish fair value, price took this liquidity, gave a market structure shift on multiple levels. Okay, and this is what I called it. It's called inducement. When there are some internal swings of a huge move and price goes above, takes that liquidity while retesting a fair value, that's when, okay, while retesting a higher time frame fair value, let me refine that word. Okay, while retesting a higher time frame fair value, that is called inducement. Okay, and when price does that, it falls like crazy. Okay, like that, you go and you check on any time frame into any chart. I'm giving, as I'm saying, I'm giving you the definitions. I'm introducing you with those things, but you have to look into the chart. You have to learn it by yourself. Okay, you know the definition and expectation. This is a bearish fair value gap. I'm expecting that it should act as a resistance. You go to the chart, you look like it's acting as a resistance. Yes, why? Is there any other reasons? There are some support. If let's say you are a support resistance trader, okay, You see how do you draw the support resistance level from the body to the low, and in this case you include that candle as well. Since bearish, I'm gonna take the bearish only, although if the low is not with the order block, I always include the order block. But what happened? That's the level exactly, that's where price tapped. So how far price went inside of that fair value is where it was common with a support level or resistance level. I'm not even saying a order block or mitigation block or rejection block, any word like that. Forget about everything, every definition. That's how far it went over there. Okay, exact. And you will see on my trade execution, my other videos, I'm talking over and over again, try to find that added confluence, added confirmations. Added confirmations always gives you better results. Whenever there is a common area, price tends to at least go to that common area, okay, at least that low. And most of the time you will find it's going to the 50% of that common area, or even to the 100% level of that common area. So these sort of things are your high probability areas. i'm I'm not saying like here is your entry happened some other places a long ago, but for this one, if this is your entry, then look for the retracement level. I'm showing you the optimal level, right, over and over again. What is that optimal level showing? Is it inside of your OTC? Just look how beautifully that bloody fair value gap aligned with your OTC. You have a liquidity inside of a higher time frame fair value gap. It took the liquidity from here, it has all those on the left, and a market structure shift here. The first break of a structure is a market structure shift. Now it came to a fair value gap, it showed some reaction, but do you want to worry about this at this moment? No. Why? Because it has taken the buy side liquidity from a weekly fair value, it's giving you this sort of move, and it has clear equal relative equal lows on the sell side as well. Why? And you are expecting a move towards the downside. If you are expecting a move towards the downside, you need to see if later on price reacts to this area or not. Price came here, okay, went up, it did that inducement, but did it went to that high? Because that's the fair value it is coming for, like that's the high it is coming from to that fair value gap. It should at least go to that level, okay, to make this retracement a powerful or valid one. Forget all that. You see this hourly fair value happened, price went lower, it took every candle's low has the liquidity, it took the liquidity, okay, but there are other areas what you were looking for, this sort of equal lows or relative equal lows. Price didn't take until here, it retraced, it didn't even retrace to the fair value on its move, okay. If I take off this one, you see like here is the fair value, here is the fair value, but price did not retest that fair value, started going lower. There is another fair value up there, it didn't go with this week either, okay. Any fair value price didn't retested yet, so it should retest that fair value. That's why I'm selecting this fair value and not this, because my OTG is saying that is already the 627 on 79 level. If it goes there, it's dangerous, it's not good anymore, because it fall below my optimal trade entry. It went there, that's the only fair value that aligns, okay. Forget whatever on the left or whatever on the right. Even if I pull that back, no body, okay, let me move it. That fair value that you were maybe worried on the way up, because why I'm not expecting this fair value to hold the price, because this move already took the liquidity it was going for, it already did that. So now it's time for price to go for those relative lows, okay, relative equal lows. And this fair value aligns with, this is a balanced price range, like that little bit here, that aligns with your fair value as well, the buy side sell side. Okay, or forget this, forget that, just the optimal trading zone, that's the only fair value that aligns with that zone. Enter into the fair value gap, I mean enter into the trade from the fair value. Why I'm putting little higher? Because the fair value started from here, not on the optimal zone line or something. You don't look for the lines, you look for where it aligns here. Okay, that's the entry. And now for this case, if you are taking optimal trade entry, try to put your stop loss always at 1, although it was not necessary here, but I'm making you use this, like practice this. And target, first target should be here. I usually target 1 to 2. Let's see if that happened or not. And if you are thinking like 1 to 2 it's not a good risk to reward, that's what I just showed on my YouTube and the community post. It's good enough for me, that's why I'm showing you there. Okay, 1 to 2 is more than enough for me, and that's what I target. Anyway, some people will then say, like, after seeing the move, I shared this setup to my brother even before price was going there. Okay, I shared the setup, as simple as that. Although he didn't find any setup later on, but because he's new to this ICT concept. However, I'm making the videos for him as well, so like he is the main reason I'm actually making the videos. So if he's learning, I'm happy with that. On my way to teach my own brother, I'm trying to give some other people some values as well. Okay, I'm not gonna give you something that it needs to come on the mean threshold to go up higher, then do this, do that, to act as a this or that. I'm gonna give you the simplest and the easiest possible way to become a profitable trader. And if you have that mentality, that training, you have to train your brain, your emotions like that. If you can do that, you can be the profitable trader. Okay, let me give you something, since I'm doing this.
For so many traders, they're always asking, like, I'm starting to become profitable, or I'm starting to lose less money. What is the fastest way for me to accelerate that progress? And what I would always say to these people is, the traders that can make that leap from unprofitable to consistently profitable, 9 out of 10 times, that is coming from them really focusing on those easy trades and sizing those up. But if for so many traders, they're always asking, like, I'm starting to become profitable, or I'm starting to lose less money. What is the fastest way for me to accelerate that progress? And what I would always say to these people is, the traders that can make that leap from unprofitable to consistently profitable, 9 out of 10 times, that is coming from them really focusing on those easy trades and sizing those up. But if you don't put that Lamborghini worth of risk, you're never going to make $1 million trade. Even when
I hope you already understood what I'm talking here, and later on you will find a lot of things. I was actually about
traders, because
look at her face. She was something like she was about to kiss me or kiss someone, the viewers. Okay, so okay, let me just move her face from the screen. This one, watch this one. I had a lot of things, but I'm gonna give you the list of things that he was talking over there. Okay, so just give me a second. I wrote it down, all the notes, all the things that he was talking over there. Okay, so I have my note with me. A lot of things he said over there, but let me give give you the few bullet lines or key lines. Okay, sometimes the safest way to grow in life is the slow and steady path. Okay, slow and steady path. That's number one. Number two, focus on getting 1% better every day. Every day you sit on your computer, better at what you are doing. Okay, if you are trading, try to be better at trading. If you are a lazy person, try to be even better, like even lazier on the next day than before. Okay, be the best lazy person. Okay, the most lazy, the laziest person on earth. Don't be just the lazy person. If you are a hardworking person, be 1% better than previous day. It's better at whatever you are doing, emotionally, your physical activities, emotional activities, whatever it is, do it better way, in a better way than previous day. How did you compare, like how did you trade comparing the previous month, not day? Okay, not day. In this case, why he's saying month is because if you trade today and if you try to compare it with tomorrow's trading result, the variation, or the what it calls, the ups and downs will be so high within 1 day or 2 days. Okay, it will change. The result is not a consistent one. You are trading today, tomorrow you lost a bigger amount, or tomorrow you lost whatever you made the profit. You won't see the change over there. For 1 month, whatever you have done in your trading, if you have journaled it, if you have the history with you, if you have taken some sort of whoever is with me right now. Okay, let me give you it one more time. If you are using Windows, try the snipping tools. Okay, Windows snipping tools. Here I'm putting on the YouTube. Here on the snipping tools, you will have the option to say, take a screenshot or record the screen. Okay, if you select new, it will give you the option to select like this. Whatever you select, you will find a recording option. You record your trade every day before taking the entry. Okay, how you are looking into your chart. Okay, let's say I'm marking all these things. I'm gonna start my recording right when I'm doing that analysis. Why? Is because when I'm doing the analysis, if that is a profitable trade, I will have the analysis with me, that okay, I looked into these time frames, I marked these major levels or these sort of levels, and then I went for my setup. I waited for my setup to happen. This happened during the setup. You will have everything in your recording. After the recording finishes, you can it's your video journaling. If you don't even need to come and watch me every day. You don't need to come and go watch other YouTubers every day. If you know what to do in terms of your entry or your analysis, your market bias, things like that, if you know where the market can possibly go and where it can possibly reverse from, or where is the liquidity or draw on liquidity, simple and small things like that, what the things are called, if you know that, order block, fair value gap, if you know those simple things, you will know that yes, now I can see how market is reacting around that area. You see, there is nothing over here. Okay, but this 1 hour fair value was very important. Why it was important? As you can see, like in 1 hour there are liquidity graphs, and then market started displacing lower. Okay, market started going lower. There are some order blocks here, or you can call order block these things. There is a fair value gap as well over this area. Price went from like this is a liquidity grab, but did market broke that area? No. Like when it came here, first time it came to that 1 hour fair value, it went lower. And also let me give you this as well, the equilibrium or the 50% level as well. This is Bitcoin, but See that 1 hour fair value? That's the only fair value from here to the retracement and then coming back. Okay, like from here the liquidity took all these lows. If I'm a lower time frame trader, every single low is important on the higher time frame, because you don't really need to look for all these on the left or on the whatever areas. Just simple one single liquidity can provide you a lot of area to earn from. Let's say I'm trading in 1 minute time frame. 1 hour candle, one single candle can give me 60 of 1 minute time frames. What do you think? Within 60 candles, let's see, like on the 1 hour, let me see how many, like how much of the area it takes for 60 candles. That's oh shit, I just right clicked from habit. Okay, because I use the continuous drawing, so usually that's exactly 60 bars over there. I don't know if you guys can read it or see it or not. So it takes almost half of my 32-inch screen. Okay, that's half of the screen or half of the data you can see on the screen. So that's how far it goes for 60 candles in 1 minute for one single candle. Now do you think to trade in 1 minute I need to go on a weekly candle? I don't think so. Yes, what you can do, you can have a long-term bias from the weekly candle. You can have added confirmation from there. Why I'm saying this is because you can see like price previous week it closed above the liquidity level, or the week before that's high. Okay, what happened here? Okay, let me come from this area. Let's say this is Bitcoin I'm talking about. Price closed above, took the liquidity from low, but it failed to close below, it closed above, just starting from here. Okay, so what is the next target here? Price took the liquidity, failed to close above. Now what will be my next target? The swing low. Now I'm not gonna enter into a low trade straight away. Okay, there are rules for entering into a trade. Okay, for a downwards entry you want to see some sort of swing high is created. It will give you that liquidity grab market structure shift, this sort of formation. Okay, and only then you gonna enter into a trade. You are not entering, and enter means you are looking for a fair value gap, something like that, around that 50% above that 50% of retracement area, the optimal trade entry that I'm just showing over and over again. You will look for that, then you will enter. Yes, you will not get entry every single time that happens. You will get entry if you are experienced enough, if you have studied your things properly, only then you will get entry most of the time. Other than that, sometimes you have to skip few of them. Okay, that happens. But what I'm saying here is, it took the liquidity, closed above, that was the next, took the liquidity, closed above, failed to close, that was the next, took the liquidity. If it closed below right here, okay, this is what I'm saying, before the bull run price should come lower because of those things. But immediately the next day, let's say I'm a loser here because price gave it a higher run, but what I said over here, for a lower run I need to see a high is formed first and then gave me that setup, and the next day's candle has a week this low. Okay, and then it started going up like that. So this day I'm not a loser, I don't have an entry. Why? Because I didn't get that market structure shift. If it gave that market structure shift, it's a weekly candle, so during that week if I had anything on the lower time frame, I can still get out of that 1:2 risk to what it calls risk to reward trade, if I have set rules for that. But what happened on this day, let's say I lost. Okay, I don't want to make it complicated or sound like I'm right all the time, or I'm a 100% winning trader. No human being can be 100% right, or no one can win 100% of their trades. even the top 5% who are the winners, they don't even they don't even win 65-70% more than that. Okay, they cannot even win more than that amount of trades. But when they wins big. That's the problem. That's the difference between you and me. Okay, it took that, closed above. What will be my next target? Here on the upside. Took that, closed above. What will be the next? On the upside. Now what happened here? Price took that liquidity, it's failing to close above, or it failed to close above. What the market is doing right now, it's giving me, it's inside. Okay, it's a weekly candle. It's gonna take 7 days for Bitcoin to finish that week. Okay, it's not forex or indices that it's gonna take 5 days. It's crypto, so it's gonna take 7 days. But what gonna happen here is what I said, right around this area. For this low to be taken out, I want to see that price is first creating a high, then, oh shit, this sheet doesn't work properly. Okay, so let me use this. So exactly what the move you can see here. Okay, I want to see something like this. So this is, let's say, this is where market should open, right? Because that green candle close here, that's where market opened. It created a high. Now I wanted to see some sort of a structure around this area. So let's see what is happening around that area. And what is that open is here. Okay, this one, this is Sunday midnight. That's what I'm seeing over here. So after that, this day it created this small little high. Now on the daily, of course, if I'm looking into a weekly candle, I'm not gonna enter into a daily time frame or something like that. So I need to go at least two time frames lower so that I can see some sort of a structure. So here on the 4 hours, I cannot find any entry setup over here. Can I find any entry setup over here? When can I possibly find an entry setup? Since it took some liquidity from here inside of a 4 hours order block, and my market bias is lower, if the market closes below this swing low, only then I can have a possible market structure shift, and then I can go for these relative equal lows. Okay, so I need to wait here, and then I have to have a fair value gap or some sort of point of interest so that price can retrace to that before taking these liquidities. Only then I can consider going for a short entry. It's simple as that. Okay, so it's from the weekly that I'm finding this sort of bias, and market is already reacting like that. So how hard it is to understand where I have to go. Now if I trade on a I'm shorting BTC. If you have a setup, yes, why not? You can short BTC. Very good about that. Okay, so weekly sell side imbalance, buy side inefficiency, depending on how much leverage you are using or how much capital you are using. Risking, not using, actually risking, because that's also important. Unless you are trying to, you know, have that Lamborghini dream, a Lamborghini size lot. Anyway, you can all I'm suggesting is, whoever is here, whoever is trying to learn, if you know the definition, look for it by yourself. Okay, if you have any confusion, then you look for a mentor. You are here to watch my video, you like me, thank you for that. Okay, I'm thanking you, but my goal is to teach people, and I'm gonna give you and provide you that how I am a profitable trader. No, I don't have a personal mentor or something. I didn't take any mentorship from any of them, any paid mentorship. Yes, I have. When I found my interest in trading, I started looking for those things. So I started with some YouTubers who has really high reputation. I showed it already. Then I started buying some books. I started reading those as well. I have multiple books regarding trading thing. Slowly, like first I started with that support resistance with some with some indicators as well, like EMA, moving average exponential, then RSI, then ATR, things like that. Okay, so volumes as well. Volume is also very important for support resistance trading. So these sort of things I started combining together. I started with those things, and when I found ICT, it didn't took me too long to learn those things because I already had the knowledge. But when I found ICT, I can say that how ICT is looking into the chart. He is looking into, instead of a area or a zone, he is looking into a specific part. Okay, instead of marking a support like this entire candle, like here, okay, it's acting as a support, it acted as a resistance, things like that. He is looking at one single candle as a order block. That becomes your support over here. That becomes your support over here. Why I'm saying over here is because price went above that line, came, and then went above that previous high. As simple as that. Why I'm looking on the left and doing this calculation is because that's what exactly it is. It's a weekly chart. I cannot have any more data on the left, but I just showed you, right? I showed you from a swing high that took some liquidity, or from a fair value gap that is coming down. That's your support, that's your order block, because it's coming down from a major level. What sort of major level? Here is your swing high. Okay, you have two swing highs over there, one here, one on this candle. Why? On the left side you have two, on the right side you have two. You need at least one, at least, but here you have two swing highs. Price took that liquidity, went above that, means taking liquidity, as simple as that. People who shorted all got stopped out here. And then where is it coming from? It's coming from a fair value gap or a previous order block. Okay, that also becomes your support area. It's, or in this case, resistance area, because since it's coming from up to down, it's resistance area. Why this is your resistance area? On the left you can see price took some liquidity from these levels. Since that candle's wick went above the previous candles or previous wicks, you see, I hope you can see this. Okay, I'm not sure if you can see this part or not, but I don't need to zoom that much. Instead, what I can show you is this specific fair value gap on the weekly candle. That's where it tapped. Okay, it's coming from there. So that's the last up close candle before a downwards move. That's your previous order block. Price came to that. These things is happening inside of that order block. Now it's coming lower. I hope you are getting my point. Okay, so that one single candle has this much on BTC. Now if you are a US 500 trader, or if you go to any other chart, just let's say like what this one may be on the weekly, I don't know, I have showed it maybe already, but that is your bullish order block right now. This is your bullish order block. Why? It's coming from a weekly fair value gap. There is another order block, but it also is coming from a liquidity, major liquidity level. It's a weekly level liquidity. Okay, so it's coming from there. So if I look into my left on that one single candle area, just look what happened before. Okay, before, why that became my order block. These are the reasons it became your order block. Okay, price went above, it acted as a resistance, again came out of that area, again came here, acted as a resistance, sent higher, came here, acted as a resistance, sent higher. Next time it didn't even consider coming here. Now here it came lower, you can see it went up, finally broke below it. I mean, this is a weekly candle, right? So it, a single candle, wherever it is acting and coming and going below that level, it's a huge, if you are a trader you will know that how big of a move it is. So if I say this is a resistance, it's a huge area to actually look into. Okay, went above, it acted as a support again. Why I'm saying this? Went above with this candle, came lower, acted as a support, sent higher, took the liquidity, closed above, again came lower around this area. So this could have been your, and what I'm looking here, this is a candle that happened in the future when price were here. These ARs, these candles, nothing were there. I'm showing you an example from a candle that happened in the future. Okay, this candle was 2022 May, and this candle is 2022 23 October. So it happened in the future, but in the past that same area had this sort of reactions as well. Why? Because you will find a better order block. You see this big order block that I started like fumbling around this area. Why I fumbled is because I forgot to mention that it's in the future, that I'm looking into the past, that the same area over there how it acted. Okay, as simple as that. But this is a huge order block. Why it's a huge order block? Look on the left where if there is any support or any resistance area or not, and what can be a possible order block if it comes from a support or a resistance level, and that's according to ICT. Now you look around that order block, if it acted as a support or resistance or not. How long, like how many candles are there inside of that one single order block? This is why I'm saying like ICT is using the exact same thing. That's why I said also go watch this video. If you don't know Umar Ashraf, Raja Banks, Wasik Asim, Iliad, you will know after this video. Okay, so this guy, they combine this table combines, they own two of the prop firms, the funded challenge or other things, they own two of them. Okay, and they have more than what it calls $1 billion, I guess, if I'm not wrong. Their worth is nearly $1 billion combined, all four of them together. So 25 millions or more than that each. They trades. Okay, I don't know about their wealth or anything. They trades, the account they trades, it's nearly $1 billion. Okay, so yeah, I mean, I have talked for longer than I anticipated or expected. If you are interested, you can go watch those videos, especially the one with that lady, the one that I just tried to show you. I think this lady. Okay, the humble trader, that's his her channel's name, the humble traders. You go and you watch that specific video that I just showed you. I hope you took the screenshot or at least looked for the name that I showed you. If not, good luck with your trading journey. So I'm gonna finish right here, and until next time, take a very good care of yourself and your health, and see you.